The Roaring Twenties was a great time in American history. Manufacturing was up, steel production and railroads made vast improvements in our nation's economy. Throughout the 1920s, a long boom took stock prices to peaks never seen before. From 1920 to 1929, stocks more than quadrupled in value. With new methods in manufacturing, goods were now cheaper and readily available to many Americans. Things like cars and houses could now be affordable to more and more people than ever before. More people invested in the stock market, hoping they would get rich quick. And in 1929, stocks were at an all-time high, and many were still investing. On Thursday, October 24th, many investors started pulling out of the stock market, fearing all their investments would be gone. This day would come to be known as Black Thursday. On Tuesday, October 29th, 1929, the stock market totally collapsed. This day would be known as Black Tuesday. On July 8th, 1932, the Dow closed at 41.22 points. The market had completely collapsed and lost 89% since Black Tuesday. The Dow finally surpassed its 1929 high a full 26 years later in 1955. The problem started in the 1920s when real estate values were on a continuous rise. By 1925, values of real estate in the United States had peaked and were beginning to drop. Because of this, the market started to sink since the economy is heavily based around the housing economy. Bank runs, or large numbers of anxious people who withdrew their deposits in cash, became more common and forced banks to liquidate loans and often leading to bank failures.
You're thinking of this place all wrong, as if I had the money back in a safe. The money's not here. Well, your money's in Joe's house, that's right next to yours, and in the Kennedy house, and Mrs. Maitland's house, and 100 others. You're lending them the money to build, and then they're going to pay it back to you as best they can.
Some 650 banks failed in 1929. Then in 1930, 1,300 banks failed. Even bank patrons who had not invested in shares became broke as $140 billion of depositor money disappeared and overall 10,000 banks failed. Taking into account that $1 in 1929 would now, in today's money, cost $13.25. Overall, losses would equate to over $1 trillion in today's money. In December 1931, New York's Bank of the United States collapsed with more than $200 million in deposits at the time, making it the largest single bank failure in American history. Demand for goods declined because people felt poor of their losses in the stock market. More than half of the automobiles in the nation were sold on credit by the end of the 1920s. As a result, consumer debt would more than double during the decade. Then, as the unemployment rate rose and the nation's economy grew worse, everyone stopped making purchases. This, in turn, led to further reductions within the workforce. Consumers were suddenly unable to pay for items that they had previously purchased, like cars and houses, which they purchased through credit installment plans, leading to massive amounts of repossessions. The unemployment rate rose to more than 25%. 12 million people are out of work in America. Every 1 in 3 Americans were now living below the poverty line during the Great Depression. Rich bankers and investors lost all of their savings, and the poor became even poorer. There were many attempts to help boost the economy, but nothing really helped until the beginning of World War II in 1941.
So first of all, let me assert my firm belief that the only thing we have to fear is fear itself.